to the computer. Okay, welcome everybody. This is another of the Let's Do Well Financially, brought to you by the Aries Foundation for Financial Education as part of your retirement plan education and ongoing wellness. This one we're doing is called the top 5 questions on life insurance. Because see, this is what happens over the years as we've been doing this on and off, that we keep getting questions about life insurance. This thing, that thing, how does it work? What does it work? What does it do? How does it work? How much does it cost? All of this stuff. And so Craig and I thought all we would do is we would put together all of the questions that we got asked the most and then just answer them. So this is sort of how we came up with this and what we're doing for you today. Real quick, for those who don't know us, my name is Tom Alessi. I am one of the consultants for the retirement plan. I've been doing this for almost 25 years now. Those letters after my name just mean that I am a certified plan fiduciary. That means that I will always act in the best interest of anybody that I am giving guidance or advice to. I'd like to bring Craig in. Craig, can you introduce yourself?
Sure. So I'm Craig Richardson. I'm your other advisor on the plan. And I've been in financial services a little over 20 years. And I specialize in working with families and individuals to help them define their financial goals and have a better relationship with their money.
And lastly, we are excited to bring on our newest associate at not only us with the Moody Street, but also been with us from the beginning at the Aries Foundation. Melanie, if you can introduce yourself.
Hi, everybody. I'm Melanie. This is my first year as a financial professional working with Tom and Craig, and I'm dedicated to helping others find solutions to their financial concerns or worries.
Terrific. And real quick on the nonprofit aspect of this. So we launched this nonprofit, the Aries Foundation for Financial Education, a few years ago with the intent that we were trying to help everyone have a better relationship with their money. You can visit the web, it's ariesfoundation.org. You can look at us on all the different social media channels that we have, our YouTube channel where all of our shows are, but you can just get a sense of what we're doing, what we try to do, and hopefully get a little bit of better understanding of your money and your finances as we go through some of these workshops and presentations with you.
Mm-hmm.
All right, so the first question we get asked is, how does life insurance work? Greg, how does life insurance work?
Well, so the basic premise of life insurance is that you get insured for a certain amount of coverage, whether that's 100,000, 50,000, a million. And what happens is if you pass away while that coverage is in force, somebody, your beneficiary, gets paid money. So it's there to replace the income that you are bringing into the equation.
Right, and there's a lot of different ways to calculate how that, and that as he said, that number is what's known in the industry as a death benefit, is what the claim amount would be on the policy, as different ways to get, how do I come up with a number? And we've had this over time, and Melanie's been exposed to this as she's gone through this with us over the last couple of years, that sometimes somebody will say, well, we just, 300,000 sounded like a good number. Well, there was nothing really basic, it just sounded like a lot, or 500,000. Gee, that sounded like a lot of money. And sometimes there is, yes, that could work and that could be the number, but then there are other times when that's not reality, right? It's just never going to cover the amount that was needed.
Mm-hmm.
What are the different types of policies? So I'll take the first one. Greg, I'll hand you off on the second one. Melanie can chime in with you or chime along with this. So there's basically break into 2 different camps.
Mm-hmm.
The first one is what we would call term insurance, or in the vernacular, when Craig and I do this, we talk about in housing, renting versus owning. So term insurance is like renting. This is a policy that is written anywhere from 1 year to 30 years, and it basically covers me for that period of time, point A to point B. If I get to point B and I'm still alive, they get to keep all the money. That's it. Nothing came from it. It's just more of peace of mind. I didn't die during this time period. Mm-hmm. It's very, very cheap because it doesn't build up any cash value. Less than 2% of all of the claims that get paid out on a yearly basis come from term insurance. So they pretty much know you're not going to die unless something catastrophic happened to you. So it's more of a it's almost like homeowners or car insurance. Right? This is just something that's there. I have peace of mind. I never really want to use it because let's face it, if I use this, I'm dead. That's the reality. Now, the other side that I'm going to toss over to Craig and Melanie is permanent insurance.
Yes, so permanent insurance is kind of like buying the house, right? It actually, the premiums are typically higher, the amount of payments you have to make. However, just like, the mortgage can sometimes be higher than rent. But the difference is you build up, we say, called cash value inside the policy. So over time, the premium payments that you make, depending on the type of policy you have, can be greater than the amount of money that you put in.
So sort of like equity in a home type of thing.
Yeah, so over the long run, like I said, let's say, you've already explained in term insurance, most of the time you outlive the term insurance. So when you outlive the term insurance, all the money you paid in, you don't necessarily get back, right? It's kind of gone, kind of like your rent money. You're not getting your security deposit back either, right? So, and the life insurance, what happens, is you build up cash value, and that cash is yours. You can use it for whatever you want. So if you get to the end of the 20-year period, or that you would have had the term insurance for, you may have paid in a lot more money, but your cash value may be equal to or greater than what you paid in. So in the long run, whole life insurance can actually be cheaper than term insurance. Now, the nice thing about whole life insurance too is it's called permanent insurance. And permanent insurance is there for as long as you're alive. So as long as you make your premium payments, it pays out 100% of the time. So it's the extreme opposite of term insurance. Term insurance almost never pays out. Whole life insurance always pays out. So it's a little bit more certainty involved.
So how much life insurance do I need? This is sort of what we talked about at the beginning in terms of going through it. And Melanie, so when we bring you in, because when we're talking with, say, someone who's younger, maybe there's not as much like asset wise, maybe they just got married, they're just starting out, they don't have a home yet, that type of thing. It's kind of hard to say, well, gee, this is what the number should be, for the rest of your life type of thing. But when you're dealing with somebody who might have a house and kids and other things, now it becomes a little bit easier to say, wait a minute, you're trying to cover all of this stuff.
Mm-hmm. Yeah, so I mean, I had the same conversation with my sister, who's a young new homeowner. And I said, first of all, you need a will. You need to know you need a beneficiary for if anything were to happen to you. But secondly, I said that you need to start considering life insurance. And she was like, I'm not married. I don't have kids. Like, yeah, I have a house and a dog, but it's, like, why do I need to put that money out front? And I'm like, I know you're making a decent amount of money. And even if you start off small and get a rider where you can add more coverage, that's great. But you need something to at least cover the mortgage. And then even on top of that, if you do have a spouse and kids, you need to factor in how much you are bringing in, what your income is, and then have a few years of cushion for that. So if you make 50,000 a year, you would want around 150,000 on top of what your mortgage is. So it's dependent on individual families, but especially enough to cover debt.
Well, right, and they bring up a good point with that, because that's one of the things when we start doing this and start thinking is, as Melanie sort of described there, somebody who's younger is like, well, I don't have anything, as we discussed, but there may come a time down the road where you do. And see, part of this is you're never going to be younger than you are today. You might get healthier, you could be somebody who smokes, maybe you quit smoking, maybe you don't eat well, you can exercise, but you're never going to get younger. And as we get older, unfortunately, stuff tends to go wrong and we tend to have worse effect than anything else. So the opportunity, as Melanie was describing, about adding additional coverage for later on, when you do get married, have kids, do this thing, do that thing. Now it's like I'm just adding on to the existing policy, or I had this coverage in place. Maybe I've got a term policy and I'm converting it. I'm using terms, forgive me for that. But it's a way to do that where I'm putting coverage in place as things are happening.
Yeah. Another thing to think about too is when we talk about how much insurance do I need, one common thing that's used in the industry is called human life value. And basically that says, how much money do I make today? And how many years am I going to be working?
Right.
That's what they calculate as your human life value, and it's the maximum amount of coverage they'll give you.
Yeah. Right, that's an easy way to do it, right? How do I choose the right type of life insurance for me? This comes up all the time. I mean, this one is probably, we get asked more than any other question, right? And I think it's sort of layers between what both Craig and Melanie have said so far. Like what Melanie was describing with her sister might be, you know, look, I just got this mortgage. I don't really have anything else, so maybe term insurance for right now at least gives her the sense that if something happened to me, the family, the rest of my beneficiaries, whoever they might be, can get everything squared away and taken care of. I don't really need to be thinking about the other pieces and parts of stuff. What Craig was talking about was using this as a way to offset some of those other expenses. Maybe that's education funding, maybe that's retirement funding later on in life, which is where permanent comes in because of that equity, because of that buildup of cash. And so really this is more of that, again, individual type of thing, but from a planning point of view.
Yeah, and I think that you're right about the planning point of view, Tom, because a lot of times we'll get really sucked into these commercials that say, oh, you can get $500,000
Oh, yeah.
coverage for $20 a month, right? The issue is you don't know what you're getting. So because the problem here is you don't necessarily have to choose a particular type and be stuck with it. Some term insurances are convertible to permanent insurance, right? They may have living benefits. They may have disability benefits, waiver of benefits, all different kind of things that can be built into a life policy to not only give a death benefit to your beneficiaries, but also give living benefits to the person who owns the policy. So you really want to work with a consultant to know exactly what is it you're trying to achieve and how to, business can be an extremely powerful financial tool that typically people underestimate. And so it's really a good idea to have a conversation with a specialist and see how can this fit into your picture.
Right. And then can I get life insurance with a pre-existing medical condition? This one comes up because we deal with people, as Melanie said, we deal with people in the special needs community. We deal with people who have all different types of, you know, all types of walks of life and individuals. And the answer is more than likely, probably yes. Because what was 10 or 15 years ago, a complete no or a complete disqualifier or you can't get coverage nowadays is pretty much, yeah, we'll write you, you know, there might be some a little additional extra cost that goes along with that. But to the point where, you know, you start bringing in some of these, you know, whether we're talking cancer or medical issues or things like that, where people can get written now.
Yeah, this is where we talk about in the industry called rating class, right? And rating class determines, you know, based on your health, what classification they put you into. Are you standard, kind of the same medical condition everybody else about your age? Are you better than most, right? You take care of yourself. You're not on any prescription medication. You know, all your numbers are good. You may be preferred. Can you fly? Do you have a cape? You might be preferred, right? Or anything down below could be ratings, subratings. So really it's trying to put you in a classification, and that determines not only cost, but how much money, especially if you're doing permanent insurance, goes to cash value versus cost of insurance.
Right. So that really is that planning part of this, right? That's really, like Craig said, that having that consultation, having that sit down. And that's part of what we do for everyone, just so we're clear. We make this available to everyone. You're an employee at the organization. It's complimentary. There's no cost for you to do this. The whole idea is take advantage of us. That's why we're here. Our entire job is to help make sure that your financial security is set. With that in mind, what does that look like for you? And if you're not sure, you're not clear, you've got some questions on that QR code, just pause the recording, take your phone out, shoot the QR code. It's going to open up our calendar. We're happy to have that conversation with you. You know, let's set that up so that we know exactly what's going on and can help you make the right decisions or go down the right path, if you will. And on that note, we're going to say thanks, everybody. Look for the one coming next month, and we're happy to answer any questions.